Good morning, guys. How are ya? It's 3:40 a.m. on Thursday today. Yeah, Thursday. Wow, time flies. December 29th. We're almost at the end of the year. 2022 coming to a close. And things are pretty quiet here this morning, of course. This is a holiday week. A lot of people are away or just relaxing or just getting over their Christmas coma, Boxing Day coma. Probably getting some credit card bills starting to flow in. Probably not so quickly, but now you can check them online, right? So you can see how much you've spent over Christmas, and I wonder why you did that. I only say that because, like, those are the stories I'm hearing. It's like, what are we doing during an inflationary period, and so on and so forth. But here we are, guys, looking at NASDAQ this morning and the S&P. This is the S&P chart you're looking at here. And I'll just show you the NASDAQ. Looking very similar to what we just looked at there on the S&P. This is the 30-minute chart. Again, not a whole lot going on this morning. But I wanted to bring you in for a potential flip here on the S&P. Go to the 15-minute chart. I'd seen something earlier. Yeah. So the reason I have my arrow here for clean traffic area is because of what you see here now. We do have some wicks here, of course, and many of you will know because you've seen my if you've seen my videos that I think these wicks do matter. This wick matters more than these, and I'll tell you why. These two wicks are part of a impulse wave down. There was an intra candle attempt to move higher, but then just continue to drive down, and another attempt, and then continue to drive down. This, though, is a concerted effort to rally and a rejection of that rally attempt, push down, and then a rejection, trying to rally against this impulse wave down. And so these wicks matter. I'm only putting this line here because in order to get to this line and close beyond it, it has to pass these anyway. So I could theoretically put another one here because this one does matter too. I could put another one here because it does matter too, and I can put one here because it does matter. But there's really no need, because once I get above and beyond this last one, this highest one, then that accomplishes all of them. So I'm going to take those back out again. I just wanted to show you the mindset there. Let me just get rid of that other one. Boom, there we go. And so now watching to clear this area to the upside or clear these areas to the downside. I don't care which way. I can go long as easily as I can go short, and vice versa. I'll put you on pause for now. Bring you back if anything interesting happens. Pause now. Okay, guys, we're back. It looks like prices may want to flip up here. Don't know for sure, obviously. Can't know for sure. So what I'm going to do is just to let you know, give you a little bit more guidance in terms of what I'm thinking here, is to put a little resistance zone right there. And then a trade marker above. Essentially saying that if I get a flip here, if we get a flip here, right there, watching now, live order, guys, live order right now. For a 2-to-1 or a 1-to-2, depending on how you like to phrase it. And the reason I'm not requiring it to pass this candle is because of the nature of this configuration here, and the fact that we had this blue candle that drove all the way down looking very blue, was not able to surpass this prior wick down, long bottoming tail on the 15-minute chart. And now I'm just feeling like it wants to make a move higher. If we can get past this white candle top, I'm willing to flip that coin. will put you on pause, guys, until anything happens here, and I'll bring you back. You can see the way we're configured, and I'll bring you back if we get triggered in here. Here we go. And pushing up. Okay, I'm in this trade now. I just got triggered in on my own account. Targeting 23.75. Yep, just go checking my own platform. I trade from Interactive Brokers for scalping and day trading. No affiliation with them, but a lot of people ask me who I use. And that's who I use. Interactive Brokers, good executions, good spreads, great spreads. Terrible charting. That's why I use TradingView for charting. Speaking very softly, by the way, guys, because the rest of the world here in the New York zone is very much still asleep. It's 3:48 a.m. I've been up since 1:48 a.m. Not 1:45, but give or take. No alarm. I haven't used an alarm in many, many years, unless I'm traveling just for peace of mind. But it's just the way I'm wired. Wake up very early in the morning, by most people's standards anyway. Between around 1:30 and 2:30 a.m. most days. Rarely beyond 3 a.m. Rarely. I can't remember the last time I slept in past 3 a.m. But I'm trying to get there. I'm trying to shift my schedule over. I'd like to start my trading day at around 6 a.m. or 6:30 a.m. New York time. But I've been trading the London session, which starts at 3 a.m. for so long, years, that my brain has become very used to getting up before that. And so my internal alarm clock is very, very strong. But I am trying to shift that. All right, pushing up a little bit here, guys. Trying to anyway. There will be a little bit of resistance here, if not a lot of resistance to that move, but we'll see if we can make it pass with a bit of caffeine here. We're 49 minutes into the session, so the opening flurry, if you want to call it that, in this holiday week has already happened. We have tossed the coin, called heads, and now it's up to random outcome. Random being unknown or uncertain, with a long-term edge in our favor. Looking for a 2-hour outcome here. I'm going to put that line there just to remind my brain that there is some reason for pause here. Very sluggish on this holiday week. So we're asking quite a lot from this thing. Making that attempt now at getting through that wick. First trade of the day. Only had one trade yesterday and watched a nice big move happen without me as I was working on a project for my Telegram group, which I'm actually quite excited about on swing trading for the new year. But this big move here, I didn't participate in any of that, which is fine. I mean, I have no issue with that. I took a trade in London, which happened to be a winning trade, which is nice. And then thinking that, things are going to be pretty dead, I decided to just be a spectator during New York, one eye open as I was working on this project. And sure enough, guys, you're rejecting at that wick. No bottom tail on this candle, which is fairly unusual. As you know, most candles do have bottom wicks, and if you don't believe me, let's take a look at these. Here's one without. There's two without. But bottom, 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 no bottom, 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 bottom. Right? All these candles have bottom wicks and top wicks. Most candles have wicks, and same for all of these. They all have them, right? There are a couple here during this slow time in the pre-London that don't. One, so when you see that, it does give you a pause. I'll put you on pause here, guys. Speaking of pause, and save you the sideways grind, and I'll bring you back if anything interesting happens. Here we go. Pause. And prices are trying to push up now a little bit. A couple of minutes passed, but again, rejecting at that that wick. These do matter, but as I mentioned, this is not the same as mattering, not the same importance as these wicks because of the rally attempt and the rejection down, whereas these are very much part of an impulse wave down. There was some attempt at, the reason I'm giving attention to this one is because this is a white candle attempt with a higher top wick. So there was a rally internally here. Rally attempt, I should say. Pushing up a little bit now. There's still 3 minutes and 45 seconds left in this 15-minute candle. I'll take you over to the 30-minute. Get a little different perspective here. And really another reason why I entered this trade is because of this bottom wick push down to match this prior one. So there was a structural integrity here in order to launch from that I was willing to flip the coin on. Make sense? Hope so. Take you back to the 15-minute. Price is rejecting again, failing a little bit here. Not being able to close above. So very sluggish. Amateur traders are getting nervous now, seeing this rejecting again. After pushing up, they had some profit. I had profit here, and now I'm giving it up. Watching this thing come back. Some will actually jump out right now and try to take a sure, tiny profit, minor profit, minuscule profit, just to save face, to avoid giving it all back and losing. These are the impulses that encompass the real game of trading, the game you play inside your mind, game of impulse control. I'll take you over to the Three Sisters. This is the NASDAQ. These are 1 minute charts. NASDAQ, S&P, the one we're trading in the middle, and the Dow on the right. And what you'll notice is all three of them are doing the same thing. These markets are synchronous right now, pushing up a little higher. I'll bring you back to the trading screen so we can see how this is playing out. You see, trying to push up here. Trying to push up. What we have in our favor, though, is the fact that all three markets are doing the same. We're trading the S&P, the one in the middle. The NASDAQ is trying to do the same thing. And so is the Dow. What does that mean? It means it's a synchronous move. It's congruent. The three markets are congruent with each other. It means that the participants in the North American indices are feeling the same way right now, for now. And that makes it I would say, a stronger, a firmer move than if just the S&P was rallying while the other two were selling off or going sideways. Now you see that all three, well, you can see here, all three pulling back now. And you will see that, of course, represented here with that upper wick. Again, rejecting, right? Having a hard time closing in 23 seconds. It looks like we're not going to be able to close above this wick. We'll see, though. We do have 15 seconds left. Lots can happen in 15 seconds, but it's looking like a rejection, which doesn't bode that well for the trade, quite frankly. All right, candle did not close above the wick, closed below the top of that wick. Now we'll see if we can push up here on this new candle. Put you on pause for now, guys, and bring you back if anything happens here. Pause. And you can see prices trying to push up again, trying to break that prior wick high. Well, we'll see. It looks like we're going to give it a little push now. Watch now. Sense that I have. Boom. There it is. Able to break that. I know it seems minor, but it's important for the progression of this trade. Take you back to three sisters, all moving in sync. The blue horizontal line is the London Open. All three trading above London Open, trading above their EMA, and displaying three white candles, slightly blue candle on the Dow. There we go, all three white. Bring you back to the main trading screen. Trying to push up here. So at this point, guys, I'm going to tighten my stop to break even. This is a no-lose trade now. And all I'm saying here is that I'm willing to give up the potential 2-hour win here if prices break down below the current candle, basically, more than this space you see here, right? So if this candle flips blue and fills this gap, I probably don't want to be in this trade anymore. That's all it's saying, right? So essentially, if this continues to drive up, I do want to be in it. If it flips to blue after making this momentum push, then it becomes suspect at best. That's all I'm dancing with the market on. That's my negotiation with the market. And it provides a long-term edge to me. Now this could absolutely, actually very easily flip and take me out at break even and then drive up. But that won't matter to me at all. I mean, will part of my psychology go, darn, maybe I should have given that more room? Of course, because I'm human. But as a standard philosophical practice, it does not bother me. I'm running a trading business practice here, we're in the business of extracting profits on a consistent basis, not winning every trade, not catching every move, not even catching most moves, not catching all of a move, not even catching the largest portion of a move. My entire goal is to extract profits by catching the most certain move, and there's nothing certain about trading, certainly not scalping and day trading. A very, very challenging game indeed, as anybody who has day traded knows. The vast majority of day traders lose. I would venture a guess that it's nearly 100%. Shocking, I know. But when you've been trading for 34, 35 years, now into my 4th decade, and worked with thousands of investment advisors and their high net worth clients, you just know this anecdotally. There's not a whole lot of really firm statistics on this. I mean, a lot of brokerage firms do have stats on their, they will produce things like, only 76 or 77% of their traders are in profits this year, right? Overall, though, that number is probably significantly higher. Pardon me, 76% are not in profits, are losing. 78, 80, you see different broker stats. But those stats are interesting because of the survivorship bias, right? Many just blow their accounts and leave. And so it's difficult to extrapolate a whole lot of information out of those, but it's an important starting point. Meaning that the majority lose money. Those numbers change when we get into swing trading and position trading, of course. But even then, most traders mess it up. Hence the important notion that this is a mental game, a game you play inside your mind. And to learn more about that, I encourage you to listen to and watch my mental game playlist on YouTube, the YouTube channel, link in the description. And the top 5 videos in that playlist I would listen to on a loop, quite frankly, over and over again. If you can handle the sound of my voice. I mean, nobody likes the sound of their own voice, but I've been getting tremendous feedback on those videos. And these are philosophical teachings that I've been using for years with traders and seeing amazing changes, life-changing adjustments in the trader's mindset, the real game. I'm going to put you on pause again, guys, here. I'll bring you back as we progress here in this trade, win or lose. Okay, guys, we're back. I'm going to make a slight adjustment here because now we are outside of the 1 hour open. We're now at 4:10, soon to be 4:10 a.m. The London Open was 3 a.m. So we're outside of that 1 hour, and momentum seems to be kind of waning a little bit here. So what I'm going to do is to bring this down to a 1 hour win, and that's a 4.25 points here. Instead of going for that 2 hour, we're going to go for 1 hour. We just need to get back to right there to close this thing out. Move my own target as well in my account. Right, to this trail that's been blazed. That was the original stop, was 4.25 points here on the S&P. You can roll back the video to check that if you like. We're trying to get taken out here at 4.25 points for a 1 hour win. Remove this. Looking for that push now. Here we go. So my hope was that we would just push up within that first hour window while momentum is usually significantly stronger. But this is a holiday week, guys. It's very, very quiet out there in terms of volume. Certainly in the London session. I think we'll see more in the New York session, of course, as we typically do. Watching for that push now. Market's playing with us just a little bit here. That's okay. Need that push now. One more. And we're done. Nice trade, guys. So we managed that dynamically. We decided to take profits a little bit earlier than our initial goal, but it was a full 1 hour trade here on a very sluggish and quiet holiday morning. This may totally drive me because of the clean traffic here. This might just go to our original target, but that's okay. I'm happy here outside of the opening window to take a nice win and go into the rest of the day. Thanks for joining me, guys. Been a pleasure as always. Happy holidays to you, and we will talk soon. Take care. Bye-bye.